Hey everyone, welcome back to Corporate Decoder, the place where we dig into the dry filings of corporate America so you don't have to. Today we're cracking open Hallmark Venture Group's latest 10K filing, and let me tell you, this report is like a plot twist you didn't see coming. Maybe a little bit predictable, but still buckle up, because it's going to be a ride contour picture of a company trying to find its footing after a period of significant changes. So this is the story of a company swinging for the fences after years of just trying to get on base. First things first, Hallmark Venture Group filed its annual report for 2024, so we know they are keeping up with requirements. Hallmark Venture Group, originally a Colorado company, shifted its operations significantly. The company completed a big move, acquiring Jubilee Intel through a merger that made Jubilee a wholly owned subsidiary. Jubilee Intel is an SCM, search engine marketing automation platform. In simpler terms, they help businesses manage and improve their online advertising. Good news, Hallmark Venture Group hasn't faced any big cybersecurity problems that seriously hurt their business. Let's dive into the numbers. The price of their common stock has been a roller coaster throughout 2023. It bounced between a tiny $0 1 ols and 03 a 0000L 1/5 It's important to note that their stock trades on the pink open market, which generally means the company is either unable or unwilling to comply with the listing requirements of exchanges such as the New York Stock Exchange or NASDAQ. Now let's look at their balance sheet. As of the end of 2024, their assets totaled around $666,536. Accounts receivable, money owed to them, stood at $555,195. Liabilities were significantly higher, clocking in at $1,280,041. This results in a stockholders' deficit, a negative net worth of $593,505 to Let's move to the income statement, which tells the story of their profitability. Revenue for 2024 was $609 and $549, a big jump from practically nothing the previous year thanks to Jubilee. The cost to generate that revenue was $89,087, leaving them with a gross margin, the profit after subtracting the cost of goods sold, of $522,462. Operating expenses, things like administrative and professional fees, totaled $248,917. Digging a little deeper, interest expense was $55,248. And they had a significant gain in the change of fair value of a derivative around $161,000. For the year, they report a net income of $154,144,145, $125,084 Tom Yen 23. Basic income per share is near zero, showing minimal profit relative to the number of shares. Looking at the cash flow statement, they used $253,076 in operating activities, money used while doing business. Financing activities provided $379,091. This resulted in a year-end cash balance of $26,015. It's worth noting that their auditor has expressed substantial doubt about their ability to continue as a going concern. That's auditor speak for this company might not be around much longer. They also have a note receivable of $100,000 with interest of 8%, a loan they expect to get back. They also owe $36,130 in stock. The company has what is called a derivative liability for its convertible promissory notes, valued at over $500,000. Now, let's talk about the story behind the numbers, or within the filing itself. This company has had a lot of changes in control with different groups and people taking the reins over the years. Most recently, in 2024, there was a situation where agreements with Stephen Arenal and Arum International were cancelled and previous leadership was reinstated. Then, in September 2024, Evan Bloomberg got control of the company. This report does not include any information about defaults relating to securities. Cybersecurity is on their radar, with the board overseeing risk management. So far, they haven't had any material cybersecurity incidents. The company mentions it might be involved in legal proceedings from time to time, but isn't aware of any major issues right now. On the not-so-great side, management admits their internal controls aren't effective. They acknowledge material weaknesses in their financial reporting, mostly due to limited resources and a lack of proper personnel. The filing includes several notes to financial statements, covering accounting policies, debt, and equity. It explains how they handle things like revenue recognition, stock-based compensation, and how they value their financial instruments. The company reports several instances of debt forgiveness and conversions into common stock, actions that directly impact their capital structure. Lastly, there's a statement indicating there's no information on insider trading. They paid their accountants about $24,575 for audit services in 2024, a bit higher than the previous year. Kitchumoni 24, a bit higher than the previous year. That's alright. So what does all of this mean? Here's my take. Hallmark Venture Group is a company trying to reinvent itself through acquisitions, specifically with Jubilee Intel. While the acquisition has brought in revenue, which is a massive improvement from prior years, they're still dealing with significant financial challenges. The auditors' doubt about them continuing as a going concern is a big red flag. They need to prove they can manage their debt and turn that revenue into real profit. One of the key risks and opportunities lies in their ability to integrate Jubilee Intel and effectively scale its SM platform. The success of this technology will dictate their future growth. However, they need better internal controls to ensure accurate and reliable financial reporting. Their high debt and the need to rely on debt conversions, along with the auditor's warning, makes them financially unstable. The lack of effective internal controls raises questions about their reliability. So, while there is a hint of success coming through, they're a long way from being financially healthy. Thanks for decoding with me. If you found this breakdown useful, hit that like button, leave a comment, and definitely subscribe for more corporate deep dives. See you next time.